Well, despite the curve flattening in Australia, it does seem that coronavirus has at least one casualty left in it, and that's the airline Virgin Australia. Put simply, this company was in bad shape before COVID-19, but now she's on the ropes and in desperate need of big money to stay afloat, something I think in the order of $1.4 billion. Well, perhaps with the exception of Alan Joyce, nobody wants to see Virgin go under, and since its launch in the year 2000, it's brought real competition to our domestic airways, and it employs close to 16,000 Australians when feed-in industries are considered. But equally, I have to say, I struggle with the idea of Australian taxpayers stumping up close to $1.5 billion for an airline that's 90% foreign-owned. I mean, it might be called Virgin Australia, but its major shareholders are Etihad and Singapore Airlines, a couple of Chinese conglomerates, and the British billionaire Sir Richard Branson. In fact, only 10% of Virgin is listed on the ASX. And consider this. If the government of Abu Dhabi, which owns Etihad, and the government of Singapore aren't willing to throw Virgin a bone, many would be justified in asking, wouldn't they, why should the government of Australia? But the situation's more complicated than that. You see, if Virgin were to collapse, not only would thousands of Aussie workers be thrown onto the dole queue, supported by the taxpayer anyway, but Qantas would have a monopoly. And with this virus delaying indefinitely any sort of return to travel normality, there are real concerns that even Qantas won't be able to hold the line forever and a day. In other words, if a global travel lockdown drags on for too long, then the flying kangaroo will join Virgin, surely, with the begging bowl out. And if it gets to that, which it might, could Canberra really say no to Virgin's cry for help today, but yes to Qantas tomorrow? Difficult decisions and turbulent skies lie ahead. Well, let's see what the panel make of it. Corey, I think you were probably in the parliament when the whole Ansett situation went down. What's your take on this now with Virgin?
As I was listening to your editorial, I thought you know certainly how to wedge me on this issue, because I don't like monopolies, but I don't like governments having to bail out commercial companies. And so you've got to ask, what's the greater evil here? You make an excellent point, Michael, about I think 90% of Virgin is foreign-owned by other nations and other national carriers. Why would we be bailing them out? The only justification I can see is to prevent a monopoly situation in Australia. And if the Australian government was to go down this path, it shouldn't be lending the money to Virgin, because in effect it's lending money to foreign governments. It should be basically investing in it, taking a majority of the shares. That's not nationalising it for all you free market people out there. It is actually protecting competition until it can be sold, and maybe sold at a profit. But Michael, this issue is one of those ones where you're damned if you do and you're damned if you don't.
Well, that's the case, isn't it? Because, of course, one thing the government said very early on with the coronavirus was that any foreign investment, the FIRB would be invited to scrutinise from $1. And, of course, that was clearly aimed at trying to set a bit of a warning to China that because you've, in essence, made the crisis or the virus worse than need be, if not created it, you're not going to come in and snap up businesses that then go to the wall. But, of course, this would be a big test, and if some Chinese airlines or the government over there were half smart, Corey, they'd offer to buy Virgin, wouldn't they, and test the government's mettle on it.
Well, this is exactly right. They could easily do that. We know the Arab airlines. I mean, Abu Dhabi or the UAE has massive investments. Singapore does. They've got a sovereign wealth fund as well. All could potentially swoop. Now, some of these are better providers than others, as long as they're there for competition. But we also know that some national investments or some government investments are not benevolent. They're designed about control and about authoritarianism. They're the ones that we need to reject. So if the Singaporeans said, I want to buy Virgin and have a crack at that and do it, I'd be pretty happy with that. If the Americans did, or the Kiwis, not that there's enough money in New Zealand, I don't think, to do it, but, you know, there are investors and there are investors. But it's a tough decision. So I want to know what the free marketeer in Daisy Cousins has to say about this one.
Look, I'm honestly quite torn on this issue. I thought Michael's editorial gave a really great overview of all the sort of relevant points here. I mean, the first thing that comes to mind is those 16,000 workers who will comprehensively lose their jobs if Virgin goes under and it's not bailed out. But then, of course, there's the very glaring fact that the vast majority of Virgin is foreign-owned. So I did read today, actually, that there are 3 Chinese airlines, actually, that are sort of in talks to possibly have some sort of a rescue deal for Virgin. I mean, we can all make of that what we will, but perhaps there is hope for the airline there. And look, in terms of a monopoly, there always is that kind of danger. But, you know, as a proverbial free marketeer, I always think that need generates innovation. I mean, certainly when Ansett went under, eventually Virgin sprang up, which absolutely filled the hole. And it's been an absolute staple of Australian travel for a very long time now. And to be very honest, I mean, I hate to fence sit on this topic, but I'm going to be really sad if Virgin goes under, not just for the jobs, but just for the long service they've given around the world. So hopefully some sort of rescue deal will come through, but I can very much see the argument, and I tend to grudgingly agree with it, that this is a company that has so many foreign owners and investments in it. If they're not bailing out the airline, then, well, considering how much tax dollars from Australians are going into this entire coronavirus package, do we really want another $1 billion or so on the taxpayers' dime for a company like Virgin?
Well, and it would be very difficult, wouldn't it, also then for Qantas not to be able to get some money if Virgin get it in a market. But Sarah, I mean, what about in all of this the issue of regional centres? Because a lot of regional centres are serviced and well serviced by both Qantas and Virgin, and that does tend to keep prices down that otherwise would be very, very high. And of course, a lot of people come from, you know, regional centres into the big smoke for medical appointments and all these sort of things. If Qantas were to get a monopoly, I think I know which direction the prices would go.
That's right.
This is something the National Party particularly would be alert to, I would think.
No, look, if we go back to a monopoly, prices definitely go up. That's going to happen, and service goes down. So it's really untenable that we get into a situation where we have a monopoly. But we are in a very difficult position, and at the risk of echoing what the panel have already said tonight, it is a very difficult situation for the government. I've spoken to some senior aviation people on this, and they are all of the view that the government cannot be part of any bailout for Virgin for several reasons. One of those reasons is that actually not only are Virgin internationally Richard Branson, a billionaire, a British billionaire, not assisting. In fact, he gets $10 million a year from Virgin Australia, who have to pay for the licensing fee. So can you imagine a situation where we as taxpayers were collectively bailing out Virgin Australia, and then that money just ends up going in the pocket of one of the foreign owners? So something else that I've been told is that Virgin have actually, because they, as you said, Michael, they have been running at a loss for several years. In fact, I think this year is their 8th year that they're going to be showing a big loss, and that was before we came into this COVID-19 crisis. They've got net liabilities apparently of about $4 billion. So the true sale price for it is about close to $5 billion. Now, just to put that in perspective, you could buy Qantas for $5.5 billion. So I've been told that probably the only solution is, unfortunately, for the airline to probably wind down, which is obviously devastating for those Australian workers. And of course, as we were talking about, from a monopoly for consumers, particularly consumers in regional Australia. But then if it was liquidated, that then someone could come in for probably a few $100 million and start up a new airline. So I've been told that that's probably the best path forward.
I mean, Corey, you're probably the most free marketeer of the panel here. I mean, and this was considered after Ansett collapsed as well, although it wasn't approved, and that is you allow foreign airlines to come in and run domestic routes. They wouldn't do the regional routes, I wouldn't think, but they might do Sydney to Melbourne, Brisbane to Melbourne, that sort of thing. I mean, what's your thought on that?
Well, Michael, they would pick off the profitable routes wherever they thought they could turn a buck, and that would provide competition. I don't have any real problem with that, but let's realise that most foreign airlines are taxpayer funded. Certainly the Middle Eastern ones are, the Chinese ones are, the Singaporean ones are, and so on. But Sarah made this interesting point about, you know, if Virgin is liquidated, we don't want Virgin to go away. why wouldn't we consider a change to the bankruptcy laws like they have in America, where they can say, okay, we can't pay our debts, we're in a world of problem, but we're going to go into Chapter 10 bankruptcy over there. It allows it to continue to function, it allows them to restructure their debt, change their other facilities, but it doesn't disappear. It's not liquidated. People aren't picking over the corpse. They're investing in a body that desperately needs reanimation. So maybe, just maybe, we should start to reconsider our bankruptcy law.